Accenture and Palantir Technologies have officially unveiled a new strategic partnership known as the Accenture Palantir Business Group. This collaboration is designed to dramatically accelerate the adoption and deployment of advanced artificial intelligence and data-driven capabilities for organizations operating on a global scale. At its core, the partnership aims to help enterprises unlock measurable value, modernize operations, and fuel sustainable growth in an increasingly data-centric economy. As part of this agreement, Accenture has been named Palantir's preferred global partner for enterprise transformation, signaling a deeper and more formal alignment between the two companies. Expanding on this framework, the newly established business group brings together specialized teams from both organizations under a unified operating model. Palantir will contribute dedicated forward-deployed engineers who work directly alongside clients to solve real-world operational challenges. Meanwhile, Accenture is committing more than 2,000 professionals who have already been trained on Palantir's platforms, along with its own forward-deployed engineering teams. The overarching goal is to shorten implementation timelines and move faster from concept to execution, particularly for companies that need to fundamentally rethink how their core business processes are structured and operated. This emphasis on speed is not accidental. Many large enterprises are currently facing pressure to modernize legacy systems, integrate artificial intelligence into daily operations, and remain competitive in markets that are evolving faster than ever before. By combining Accenture's extensive consulting experience with Palantir's powerful software platforms, the partnership is designed to remove friction from this transformation process and allow organizations to act decisively rather than incrementally. Julie Sweet, who serves as chair and chief executive officer of Accenture, offered additional insight into the importance of this expanded relationship. She explained that this meaningful evolution of their ecosystem partnership with Palantir allows clients to scale advanced artificial intelligence across the enterprise more rapidly while delivering tangible business outcomes in less time. She highlighted that the blend of Accenture's broad industry knowledge and functional expertise with Palantir's robust platforms enables organizations to design artificial intelligence and data solutions while also building scalable enterprise systems. According to her remarks, these systems are intended to drive reinvention, generate lasting value, and support long-term growth across multiple industries. Looking further into how this partnership will be applied in practice, a major area of focus will involve large-scale, highly complex initiatives tied to data centers and artificial intelligence infrastructure. These initiatives play a critical role in supporting economic resilience, yet they are often difficult to execute due to their scale, technical complexity, and security requirements. In real-world environments, these efforts are rarely clean or straightforward. The joint Accenture and Palantir team will assist clients in deploying Palantir Foundry and Palantir's artificial intelligence platform in environments where reliability, security, and performance are non-negotiable. At the same time, Accenture continues to operate as a global professional services firm that works closely with some of the largest enterprises in the world on digital transformation initiatives. The company helps organizations rebuild their digital foundations, modernize outdated systems, and integrate artificial intelligence across business operations in order to create value at speed. This background makes Accenture a natural partner for Palantir as enterprises increasingly look for end-to-end solutions rather than isolated software tools. All of this context leads to a broader investment question that many market participants are asking right now, which is whether Palantir stock represents a compelling opportunity looking ahead to 2026. Palantir offers a comprehensive suite of artificial intelligence-powered software platforms, including Foundry, Gotham, and Apollo. These tools are designed to aggregate workflows across fragmented and disconnected systems, enabling large organizations to extract insights from complex and often chaotic data environments. When examining Palantir's recent performance, demand for the company's artificial intelligence platform appears exceptionally strong. During 2025, Palantir secured several historically significant agreements and formed a number of notable strategic partnerships that further strengthened its position in the market. These developments highlight both growing customer confidence and expanding use cases for its technology. One of the most notable wins includes a contract valued at up to $448 million with the United States Navy. Under this agreement, the Navy plans to use Palantir Foundry and the artificial intelligence platform to improve shipbuilding operations and strengthen supply chain processes. In addition to this, Palantir finalized a major agreement with the United States Army over the summer, a deal that could be worth as much as $10 billion spread across the next decade. This agreement underscores Palantir's deepening relationship with the defense and government organizations, while also demonstrating the scalability of its platforms. Beyond government contracts, Palantir also formed a strategic partnership with Nvidia. This collaboration integrates Palantir's data analysis and data mining expertise with Nvidia's leadership in graphics processing units and compute unified device architecture software. Together, this combination effectively creates a full-stack operating system designed to support accelerated computing workloads. This type of integration positions Palantir to benefit not only from enterprise software demand, but also from broader trends in high-performance computing and artificial intelligence infrastructure. From a growth perspective, Palantir's performance through the first 9 months of 2025 has been particularly impressive. Both the commercial segment and the government segment expanded by roughly 50% year over year. The recent expansion in commercial adoption suggests that Palantir has successfully diversified its revenue base while maintaining strength in government-related work. As a result, Palantir has proven that it can compete at a high level in the enterprise software market, a space that was long dominated by established players such as Salesforce and SAP. Among newer challengers that are successfully gaining ground against industry incumbents, Palantir clearly stands out. Its ability to handle complex data environments and mission-critical applications gives it a competitive edge that is difficult for rivals to replicate. However, valuation remains a central point of debate for investors. Palantir's price-to-sales ratio of 117 is more than 3 times higher than its closest peer among software-as-a-service companies. While premium valuations can sometimes be justified by exceptional growth and strong long-term prospects, this level of valuation raises concerns. Prior to the collapse of the dot-com bubble, early internet leaders such as Cisco, Microsoft, and Amazon reached price-to-sales multiples ranging from 30 to 50. Even those transformative companies were ultimately unable to sustain such elevated valuations once market conditions shifted. Taken together, this creates a complex picture for investors evaluating Palantir stock. On one hand, the company has clearly established itself as a leader at the intersection of software and artificial intelligence, supported by strong demand, major contracts, and influential partnerships. From this perspective, the long-term outlook appears compelling. On the other hand, the current valuation seems difficult to justify based on historical comparisons and traditional valuation frameworks. While history does not repeat itself in exact detail, it often provides useful context. In Palantir's case, it appears highly likely that the stock could experience a correction at some point. This could occur as part of a broader macroeconomic pullback in the artificial intelligence sector, or it could result from investor expectations becoming misaligned with the company's underlying financial performance. Either scenario could lead to downward pressure on the stock price. Even with these risks in mind, Palantir appears to be well positioned for the long term. The company's technology, partnerships, and expanding customer base suggest that it will remain a significant player in enterprise artificial intelligence for years to come. Investors who are focused on long-term ownership and are comfortable with volatility may ultimately feel satisfied that they established a position sooner rather than later. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.